Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirma Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Alejandro Barbosa, VP Crude and LPG Middle East and Asia Pacific at Argus Media, joining in. Alejandro, welcome to the show and always a pleasure to speak to you. My first question coming to you is with regards to where the demand is concerned. The way COVID hit us, demand was completely at a standstill. But do you think now from here on, world fuel demand or consumption is on the mend from the blow which was inflicted by COVID, despite the latest outbreak in India, which is led by a vigorous recovery that we've been seeing with regards to China as well as the United States?
Well, first of all, we have to recognize that the recovery is very uneven. Let's start with the United States. Argus still expects that demand is going to stay about 1.5 million barrels per day below 2019 levels for the rest of this year. So even if we have seen a very meaningful recovery from the height of the pandemic in the US a year ago, it's still not back where it used to be. And that's something that will still continue to show, especially on the jet fuel sector. If you look at the transportation sector, you look at transport fuels like gasoline, we're going into the driving season now in the US. And the expectations are that demand for gasoline specifically will rebound to the levels we had seen in 2019 or even surpass those levels. But there's still a huge surplus of distillates. And remember that also the US is an exporter of fuels to Latin America. So their ability to place that surplus of distillates, particularly diesel, into Brazil is still heavily affected by the pandemic, because as you know, Brazil is also going through very tough times in terms of the number of cases and affected people. So in the Western Hemisphere, there is a recovery, certainly from the bottom of demand last year, but not yet back to the levels that we were seeing before the pandemic. In Europe, we still see demand about 2 million barrels per day below pre-pandemic levels. And in Asia, right as of the beginning of April, it seemed to be, or end of March, it seemed to be robust in terms of that recovery having definitely be completed in China. And to a degree, the expectation was also that India would keep roaring along. But obviously, since especially the second half of April, we've seen a reversal in that sense. And now Argus expects that demand in India could be down for transport fuels by about 50%. And in overall crude demand down by about 1 million barrels per day. That affects the global picture of demand, because Asia has always been the leader in terms of bringing the demand back into the market. And now, interestingly enough, we see a bit of a reversal of roles, where we see the West having the most solid signs of recovery in demand.
Right. So with this recovery in demand, Alejandro, my other question is coming in. The other question that comes up over here is, how do you see OPEC reacting to this? Because clearly they have come out and said that the demand is expected to rise. They're expecting a rise of almost 5.95 million barrels per day in 2021, which is a 6.5% kind of a rise. Do you think these are fair numbers to look at?
Well, looking at the very short term, just between May and June, OPEC is expected to add about 2 million barrels per day to the global oil market as a result of the reversal of some of the OPEC cuts, and including the voluntary cut by Saudi Arabia for the past 2 months. And if we consider that at present demand in China is recovering, and they're trying to restock because there has been some destocking going on, and at the same time deal with the situation and the expected decline in demand in India, there is a question mark about whether there will be enough space to accommodate all that crude and to find homes for all that crude, especially when we see the rebound in Iranian crude exports. Remember that Iran is not part of the OPEC agreement in terms of quotas. Of course, it's a member of OPEC, but it's not part of those quotas. So you've got even 800,000 barrels per day of Iranian crude that are expected to keep going into China as refiners there keep stocking up and keep taking advantage of cheap Iranian crude relative to other crude coming from other regions. And that is something that will definitely challenge the rebalancing mechanism that OPEC Plus set in place last year. Argus doesn't expect that this will entirely undo the rebalancing. It will probably just delay it somehow, but we still expect that the market will be rebalanced by the end of this year, despite the drop in demand from India.
Right. So with this now, another aspect is that in the recent meet, OPEC's decision was slightly cautious. They raised the prospects for the positives. And the members have decided to increase their output conservatively by almost 350,000 barrels per day in May and June, and then slowly, steadily move to almost 400,000 barrels in July. Now, for how long do you think this could continue? And when do you think they could come back to pre-COVID levels in terms of where production is concerned?
The key here is to see how the Plus members, that is, especially Russia, how they continue to comply or not comply with the agreement. Because if you see Russia exiting the agreement and then going back to just an OPEC management of the market, OPEC would have to be a lot more aggressive in their production cuts to keep it balanced. So in the current setting where we see Russia asking for additional supply, to be able to supply additional volumes of crude and having more tolerance to produce above its quota, I think the onus is going to increasingly fall on Saudi Arabia. So the question is really, how much is Saudi Arabia willing to sacrifice in terms of volumes to sustain a high price? And I think the Saudi oil minister has been particularly careful to telegraph to the market that they'll do whatever is necessary to rebalance the market. So I would expect that if there continues to be the additional flow of Iranian barrels to China, and if Russia continues to seek a way out of the agreement by increasing production, the Saudis will have to bear the brunt of additional cuts. And yes, the volumes that you talked about, the 300 and 400,000 barrels subsequently, look like might lead to a bit of a surplus relative to the expectations for rebalancing that the group had before. So it's something that they will probably have to revisit when they next meet on June 1st.
Okay. And with this, even if you talk about global markets, they reacted positively initially. Price of Brent went from almost $62.5 per barrel to almost $65 per barrel. However, it again dropped back to around $62, $63 at the beginning of the week. How do you see this entire price movement from here on, taking all the production cuts, etc., into consideration?
I think the market is caught between the expectations for recovery that push it on the way up, particularly as we see the US economy posting relatively good performance, job creation, etc., and the fact that Europe may come out of lockdowns over the summer. So the expectation that overall in the Western Hemisphere, there will be a sustained economic recovery that will also lead to more energy consumption. and at the same time see what's happening in China, and potentially China compensating for what is happening in India. But the moment that the market focuses on the fact that such a big proportion of the world's population will continue to be under some sort of lockdown or movement restriction of movement, reminds the market that it shouldn't go ahead of itself. In fact, if we see the actual value of some crude grades produced in the Middle East relative to Brent, relative to the benchmarks, they're trading at very deep discounts. This is an indication that the market is oversupplied. And at some point, that physical oversupply will weigh on the benchmark. And we expect that at some point in the next few weeks, there is going to be a retreat in Brent prices as a result of that pressure from the physical market.
Right. So $65 per barrel is a psychological mark that everyone's watching out for. It is attracting certain amount of attention. But, you know, a lot of people are talking about that probably OPEC is actually trying its course to get crude to $70 per barrel. Do you think they will be successful in doing this, at least in calendar year 2021? Or do you think a $70 per barrel is something which is out of question?
The price levels that you are mentioning, 65 and 70, are not only key for Middle Eastern producers and for OPEC, but also for the marginal producer in the shale provinces in the US. So the fact that we see sustained prices above 65 or close to $70 per barrel increase the incentives for shale oil producers to start producing more, to start pumping more, and for the US to start exporting more cargoes. In fact, Argus reporting already shows a lot of availability of US crude for export. And this is while US shale suppliers have been still very disciplined because of the capital requirements that they have now. They haven't been reinvesting to expand production as aggressively as they did over the past few years. But the more that the price rises, the more that the more untenable this situation becomes, because there is a greater incentive for them to return to higher production. So I think the sustainability of oil at close to $70 per barrel will really depend on how disciplined the US shale producers continue to be. And I would say that towards the second half of this year, it's likely that we will see an increase in US production, and Argus expects that prices will fall from current levels in the first half of next year as a result of that additional supply.
Right. And with this, what do you make of the jet fuel demand? Because expectation is that at least US jet fuel demand is expected to increase by 25 to 30% in the second quarter on the back of increased domestic travel. India, again, consumption has gone down. So how do you see jet fuel demand panning out?
The key market in terms of domestic jet fuel consumption, aside from the US, is China. And China is back to the levels that we were seeing pre-pandemic. And we're seeing the US approaching those levels, or at least expected to approach in coming months. So the two biggest markets for jet fuel are on the way to recovery, but that's in their domestic markets. And we have to consider that a big proportion of the 7 or 8 million barrels per day of jet fuel that were consumed around the world before the pandemic were accounted for by long-haul travel. And the existing restrictions in terms of borders and freedom of movement between countries, particularly between long-haul destinations where jet fuel consumption, of course, is much bigger, that we don't see that coming back into the market anytime soon. So I think you're absolutely right in pointing to the sustained decline in jet fuel consumption, because that is a feature that will linger for the rest of this year and probably into next. If we take jet fuel as part of the total global oil demand, Argus does not expect total global oil demand to recover to pre-pandemic levels before the second half of 2022 at the earliest. And that is because of jet fuel mostly.
Right. So how are you seeing the refining cracks move for key fuels, especially diesel and jet fuel? Because if transport and air traffic demand increases to normal levels, what's your view on the refining cracks?
So at present, the surplus of fuel that has of crude that is developing, and that's pressuring the relative value of the crude compared to the products. It's exercising a bit of pressure, and that means that the refining margin is becoming attractive. And that's why we see that refineries, even in India, keep operating close to capacity, even in the current circumstances. But because of that, those continued high operating rates, the exports of products out of Asia, in this case, unusually from state oil companies in India, for example, may start to accumulate. And that fuel that is coming out of India will compete with surplus fuel for export from the Middle East, from China, and from other places like South Korea that have that surplus. If we come to a situation where those cargoes of diesel, of gasoline cannot find homes, then that's certainly going to exercise pressure on the margins. So we believe that the situation that India is currently going through is going to affect the profitability of refining a barrel of crude in Asia going forward. That is, that refining margins will be under pressure because of that surplus that's coming out of India now.
Okay. And additionally to this, if you have to look at sweet sour crude spreads in calendar year 21, what's the outlook for the same?
The key feature in this relationship between heavy sour over the past year has been the strength of the sour grades, the heavy grades that are usually cheaper compared to the sweeter grades. And that has been led by OPEC and the fact that most of the crude that's produced in the Middle East by OPEC is of that quality, and OPEC production constraints have helped bolster and support the price of heavy crude relative to that of sweet crude. At the same time, we've seen that US production has not been growing back to previous levels, and that also has contributed to this balance. As we go forward, we see that the oversupply of, even under the OPEC cuts and the return of OPEC barrels, will probably exercise some pressure on the price of heavy crude. And that means that we may revert to a more long-term trend in terms of the differentials between heavy and sour and the widening of the sweet sour spread as we go forward into calendar 2022.
Right. And clearly with this, another important aspect with regards to crude that's coming up is how and what progress that Iran and US are making with regards to the negotiations to revive a nuclear accord. Now, if successful, do you think it could remove American sanctions on Tehran's oil sales and boost output? And if yes, by how much?
That's a very interesting question, especially looking at how much Iranian crude China is already importing. It seems like the sanctions were not in place anymore because China is ready to buy those barrels under the current circumstances, and that already amounts to 800 or even 1 million barrels per day. Iran's target, however, is to be exporting 2.3 million barrels per day, which is what they were exporting before the whole agreement collapsed and it went back to not being able to export more than 400 or 500,000 barrels per day during the Trump administration. Whether Iran will be able to rebound to 2.3 million barrels per day anytime soon will be determined by those negotiations, but it's unrealistic to expect that suddenly all sanctions are going to go away and that there will be an agreement in place in the next few months. We expect that the earliest that there could be such an agreement would be the first quarter of next year. And based on that, we would see a gradual increase in Iranian crude exports from the current level of about 1 million barrels per day, closer to 1.5 million barrels per day, perhaps. But we don't see the return of the full 2.3 million barrels per day of Iranian crude onto the global market before 2023.
Right. So, if this happens and if the agreement is reached, do you think the extra supplies that we could see out of Tehran could pose an issue for Saudi Arabia as well as the other OPEC Plus members? Because they're clearly seeking to drain the remnants of the glut that arose last year.
So to answer your question, the key is to understand where would those Iranian barrels go to if they are actually allowed to flow freely onto different markets. Of course, they will continue going to China, but the other biggest buyer that's missing from the picture now is India, of course. And in that sense, there is a very interesting dynamic about how India can leverage the reemergence of Iran as a sustainable supplier to India to, in a way, make it less dependent on Saudi barrels. And in that sense, Saudi Arabia would have to reduce production to accommodate those additional Iranian barrels that would be coming back onto the market. And it is as the biggest supplier within OPEC and as the one leading the policy, they would have to be the ones leading any production cuts. So I would expect that, given the discipline they've shown and the determination they've shown to rebalance the market, that they would indeed make the space for those Iranian barrels to start flowing to new buyers aside from China going forward.
Right. And beyond this, my last question coming to you is, two more things. A lot of people are talking about a shift from OPEC to OMEC. What do you make of the same?
Sorry, OMEC, OMEC?
Yes, OMEC, correct.
So can you explain to me what that means? Sorry, I haven't heard the term. Organization of?
This is with regards, OMEC is with regards to minerals.
Oh, minerals. Oh, okay. I am sorry, but I am not following that that market, so I won't be able to comment on that.
Right. And lastly, with regards to OPEC, they've been encouraging its members to engage with the US administration over a proposed US bill against the group, which is known as NOPEC. And to explain that, passing the bill could put at risk US interests abroad. How do you think that could impact the oil market?
Well, over the past year or 2 years, especially since the advent of the pandemic, we've seen that there are national interests in the US in favor of OPEC, because when demand collapsed by 22 or 23 million barrels per day a year ago, even the Texas Rail Commission, which is the sort of regulator for the US oil industry, was hoping that OPEC would come back and start restraining production to rebalance the market. So I don't think that politically that is going to be a card that anybody in the US is going to be able to play quite aggressively at this point, because everybody's clear that the US itself has an interest in high oil prices for the sustainability of production of shale. Even if this means slightly higher prices for the US consumer. If we are in an expanding economy that's recovering at rates of almost double-digit growth compared to what the decline, the economic decline we saw during the pandemic, I think high oil prices may not be one of the biggest concerns, and OPEC might not be seen as detrimental to the interests of the US.
Right. And very lastly, overall, in the near term, what is the highest point that we could see crude touch and then retrace back to what levels?
The market, as you have seen, is very jittery at present. So if under the current bullish scenario, you suddenly have a disruption to supply, obviously that can trigger a $5 or $10 spike. I can't rule out $80 per barrel sometime later this year, as Goldman Sachs has forecast. But I would say that just based on existing fundamentals and day-to-day supply management from OPEC, we wouldn't expect the price to rise all the way to $80 per barrel. We expect that 75 might be sort of the peak that we see sometime now or towards the fourth quarter. But we expect that the downside is also there because the market continues to be very sensitive to lockdowns, to the pandemic, and to any effect that can have on demand, which has not yet recovered from pre-pandemic levels.
Absolutely. So that's something we should be watching out for. Thank you, Alejandro, so much for joining us on the show. Always a pleasure to speak to you. Thank you. Stay safe and speak to you soon again.
Pleasure, Hira. All the best.